Rob Warlow from Business Loan Services, and welcome to my Friday Business Finance Bulletin, a weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what have I got for you this week? Well, this week we're going to be looking at the latest report from the SME Finance Monitor team, looking at attitudes that businesses have when it comes to raising finance and dealing with banks. We're looking at the latest report that shows increasing confidence amongst UK small businesses, and Metro Bank, what they're doing to shake up the invoice discounting industry. And in my business finance tip of the week, a chat with Nick Rowe from PwC, looking at what they see as the key drivers for businesses looking to grow. So let's start off with the SME Finance Monitor Report. Now, what is this? Well, it's an independent report which looks at small businesses and their attitude to borrowing and dealing with banks. It's produced every quarter, and it's a real gold mine of information when it comes to businesses and attitudes to borrowing. Been going many years. And a couple of key stats always kind of jump out at me. So the latest report for the first quarter 2015 is just out. So one thing that I always look at is this attitude to borrowing. Now, as you know, you pick up the media, everyone is saying that banks are not lending, etc. But there's one key thing that is consistently missing. It's about the appetite to borrow amongst businesses. Now, the SME Finance Monitor team, they ask one question. They ask businesses over the last 5 years and looking ahead over the next 18 months or so, do you intend to borrow? And these are defined as permanent non-borrowers, the ones who answer no. And 48% of small businesses have said that they have no intention of borrowing. So that's nearly half of small businesses. And it really goes counter to this impression that we get, when nearly half of them have no intention to borrow money. And this percentage is increasing. Now, that's over a 5-year period. When condensed down over to the last 18 months or so, people who define themselves as non-happy seekers, in other words, they're happy not to borrow any money, that figure is consistently now coming in at about 79%. So nearly 80% of businesses over a much shorter term are saying they're not interested in borrowing. So that's just a very confused message from what the government and the media generally are trying to portray. There are very many businesses out there just not interested in borrowing. So, if they're not, where's the money coming from? Well, obviously, self-financing. And one source of money is internal sources to you, personal monies injected by the directors and owners of businesses. And it's just showing that this proportion of business owners being forced to put money into the business is declining. The latest report showed that only 26% of business owners said they had to inject personal funds. And this is way down from the mid-40s, about 46% actually, in 2012. So it just shows the whole area of finance is beginning to loosen up. But hey, here's the key stat. 72% of business owners said their key aim was to pay debt off or reduce their overall borrowing and to remain debt-free. That's interesting, isn't it? So, let's not believe that every business wants to borrow. But even if you are wanting to borrow, the good news is that those businesses that are actually approaching banks, nearly 80% of them are getting what they want. So it's clear the landscape is beginning to change. And it's a message I constantly get across. Do not assume the bank is going to say no. Prepare your plan, get your financial information up to date, and go knocking on the doors. Now, let's look at the economy generally. An interesting survey out from Hitachi Capital, an invoice discounter, and they're looking at business confidence generally. And guess what? Yes, it's on the way up. 46% of businesses saying that they're looking to grow over the next 3 months. And that percentage is up from 32% just 6 months ago. So there's clearly a lot more appetite out there. Very few businesses now looking just to stay the same. About a third are saying they're looking at the same kind of growth patterns, but many of them are aggressively going out there. So let's hope that's one of you sitting out there watching and listening to this, that you're one of the ones looking to grow. So put your plans together, get the financing package, and get out there and proactively grow the business. That's what we need. Now, one of the problems that comes with growth that we know is the fact that we can't get enough cash to maintain our growth. And that's where invoice discounting comes in. Now, Metro Bank, one of the new players in the market, is looking to shake up the invoice discounting industry a bit. Now, invoice discounting, remember, how does it work? Well, you've got invoices stuck out there and you can't get payment for 30, 60, 90 days from your client. And you need that cash in order to grow. An invoice discounter will come in and give you, in Metro Bank's case, up to 85% of the face value of that invoice today. That allows you to buy stock, pay off creditors, pay your staff, etc. Well, Metro Bank looking to shake up the industry. And what they've done, they've announced now that they're changing the way that they charge interest. They're getting rid of termination fees, so making it much more competitive when compared to some of the more mature players in the marketplace. So if you want to check them out to see what they can do for you on invoice discounting, just go along to their website, which is metrobankonline.co.uk/SMEF/invoice-discounting. So just follow the link here, or just follow a link in the description box, and you'll find out how you can work with Metro Bank to release all that cash tied up. Now, my business finance tip of the week. I recently had a chance to catch up with Nick Rowe from PwC here in South Wales, and I heard a presentation that they were doing, and they had some interesting ideas about some of the 5 key things that business owners need to be looking at when they're going for growth. So let's go to that little quick chat with Nick now.
At PwC, we've been examining what is really driving businesses at the moment, and a recent survey we did identified that 93% of CEOs across a wide range of businesses are really considering how they're going to grow their business going forward. To help them understand growth, we've identified the key 4 drivers to allow us to help them understand, and those really are innovation, developing your product, your service, whether it's developing something new or continuing to improve what you do already. Globalization, both dealing with how can you sell your product service abroad, and also dealing with the business of dealing with imports and dealing with competitors coming into the UK as well. There's also the digital age, digitalized people coming through, people getting far more comfortable with the use of technology, and they're wanting to interact far more with technology, and how is your business going to respond with that. And then the final one is the customer themselves, how you tailor your customer experience individually, because the digital age and so on, people are expecting a far more tailored experience for themselves going forward.
So there we are. Those are the 4 levers of growth: innovation, digital, globalization, and customer impact. Those are the 4 things you need to be focusing on when you want to grow your business. So thanks to Nick for that. So that's it for this week. As ever, thank you very much for watching and listening. Don't forget, you can also get this video, the podcast version now, downloaded via our SoundCloud page or via iTunes. Just go on to both of those platforms and search for Business Finance Bulletin. And don't forget to give it a like both on YouTube and also on iTunes and SoundCloud, because it all helps. So that's it. Thank you very much for watching. Look forward to being with you again next Friday. And in the meantime, have a great, successful and profitable week. Bye-bye now.